The Financial Survival Network, helping you survive and thrive in the new economy. Go to CarrieLutz.com and sign up for 30 free micro trainings on financial survival.
This show is brought to you by Miles Franklin. They've been selling gold and silver for 22 years, and I'm a customer because when you buy, they ship. For more information, go to milesfranklin.com or call them at 800-822-8080. 1490 WGCH. This is Carrie Lutz, and you're listening to the Financial Survival Network. We're here with Peter Grandich of the Grandich Letter, and we're talking about miners and whether you can make any money at them. Right now, so many of them are worth more dead than alive. It's even making me wonder. Hey, Peter, welcome back to the Financial Survival Network.
Thank you for having me back.
It's really great to have you, and we're going to be seeing you at Hard Assets in New York soon, which I'm looking forward to. But these mining companies, you talk about a weekend at Bernie's, they're comatose.
Well, yeah, it's probably the worst bear market since they bottomed a decade ago when gold was substantially below 300. And it's kind of hard to imagine with gold at 1650 that we'd be talking about a similar bear market, but relatively speaking, we are. We've seen a significant drop from their highs. We've seen a total disinterest, if not a throw in the towel mentality. And as you noted, some of them, in a sense, are worth more dead than alive because some of them are actually selling their entire market cap is less than their cash position, which is just something that we haven't seen since the last bottom, at the beginning of the millennium.
Yeah, it's pretty amazing. I mean, I was looking at a company. They're on the Amex. They've got pretty extensive operations producing fields in Africa. They're selling at 1.1 times EBITDA, and makes you wonder, what's the risk in a company like that? And they pay a dividend of, I believe, about 3%. How can you lose on that? Well,
I've literally have bet the ranch and probably have violated a long-standing rule of mine to have put so much money on the speculative/gambling side of things. But I've been living and breathing these things for almost 30 years. And like I said, other than when it was last one out, turn the lights out at the beginning of the millennium when gold was under 300, I have not seen the junior market this undervalued relative to where they should be based on what metal prices are selling at. Now, I spent a good part of a commentary a few weeks ago on my blog pointing out some of the reasons why we may be here. But even if all those reasons I pointed were valid, the valuations now, given where metal prices are and the expectations where they should be going over the next few years, I think we are just at a point where you have to be aggressively long.
Yeah, they're on sale effectively. And,
fire sale, actually, I think.
Yeah, it's like a liquidation sale, like that old odd lot savings in New York. And you look at these stocks, and then the technology for extracting minerals from the ground has improved so dramatically, and the ability to locate deposits has improved so much that the business itself seems to be inherently much less risky, doesn't it?
Well, that's a good point. Well, there is a difficulty in the mining business now in exploration, and that is, of course, so many people for years thought it was a poor industry. We didn't see a lot of the college kids get into the industry, and when you go look at any show, you see a lot of gray and a lot of balding heads at the tables because there's not a lot of youth that went into the industry. It is having a somewhat of a skilled labor shortage problem, but that doesn't, stop, when the fact that if you can mine something for $500, $600, or $1,000 and sell it for $1,600 or $1,700, it's a good business nevertheless. But I think one of the things that also has happened, and it's been an important part is, and we learned this lesson, at least I did. You always think after 30 years you knew everything, but we used to think that a weak stock market, general equity market, was actually good because somehow the market would go down, people would want to own gold, and if they raise gold up, all these mining shares would go down. But most mining stocks now are impacted negatively if the general equity markets are not doing good, because they return to being just stocks and people look for liquidation. And in most recent weeks, particularly in the last couple of weeks, I'm watching a lot of juniors trade a daily volume and not even 1/10 of what they normally trade, and their stocks are down 10%. And what that signals is literally people throwing in the towel, selling it at any price into a no-bid market. And so those are things that happen always at the end of a bear run, not at the middle or the beginning.
Yeah, we see that. It's definitely, just like you were saying, the number of people that are going to the gold shows, the hard asset shows, is way, way down. And then the web traffic to sites like Kitco, I'm seeing definite bottoms in that. And a guy by the name of Peter DeGraff, who's a big technical guy up in Canada, he tracks the web traffic to Kitco to figure out when the market's topping and bottoming. And it's been a pretty reliable indicator.
Yeah, well, it's all over the place. And it will take a return to moving back up, which I think is underway now in the gold and silver market, before we see that flow into the junior market. And I don't know what day of the week it will be, and if it's this week, if not next week or next month. But when it happens, initially we'll get a pop, and then we'll get a pause, because just the fact that it lifted off, those who still are suffering from the anguish will feel that I just need to take advantage of this slight rise to end this pain and anguish I've been in. And then once they're out, and if the metals continue going higher, then I think we'll see a bull run in the juniors. And I think that'll be probably towards the middle or the latter part of the summer and into the fall.
Yeah. The other thing that amazes me, Peter, is that companies that are actually producing, they're not exploring, they're in production or very close, are getting valued the same way as exploration companies. And you have to scratch your head, because where's the risk? They've already taken the risk and they haven't been paid for it.
Right. And, on a cash flow basis and the expectations of what they're going to earn, they've gotten really cheap. But perhaps the biggest hit has come right before going into production. The companies that had advanced stage, they're pretty well done with their drilling. They're now in the development stage, but they're not yet pouring their first gold. They perhaps have been the hardest hit in the chain here. And that's where the most compelling value is, because if and when they do get to that production side and you can start to consider cash flow and earnings, then you attract a different type of investor, and you usually get a repricing of the stock higher. So that's another area, to be focusing on.
Yeah, so it's going to get interesting real soon. It's just one black swan away. The metals prices have been pretty stable for most of the year, I guess. They had a couple of runs at intermediate highs, then they broke down, and they pretty much have stayed where they are for a pretty good amount of time.
What I think is real important there is to underline is how much bearishness came in during that time. We all know a few weeks ago, certain people who have a high profile got a lot of news about how they called the end of the gold bull market yet again for the umpteenth time, yada, yada, yada.
Yeah.
We saw a record amount of dollar-long positions in the U.S. dollar index, the most in over 10 years. The index is starting to roll over now. So despite a lot of switch from bullishness to bearishness and things that should work contrary to gold going up, it hasn't happened. So what my belief is there, we're going to see stale longs in the dollar roll over. The dollar will roll lower. That'll help gold. And we're going to see all these people that turn bearish on gold not get the decline they expected. The market will start to gradually levitate higher. And I think if and when we get two closes above the psychological 1700, we'll really see a very strong short covering rally. And that's probably going to be the fire that we're going to need to see the junior market come alive again. So if someone wants to be really safe and secure, wait till we get two closes above $1,700 on gold, and then I think we have an all-clear signal.
Yeah, it sure doesn't look like it's going to be much longer, because every time the silver price gets close to 30, pops back up, and 1650 thereabouts has really been the resistance point for gold. And like you say, when it hits 1700 and probably 35, 34 for silver, and it goes through it, that's it. And we've had this euro crisis going on now. It seems like it's a never-ending Pollyanna, disaster that the sky's falling, and yet there's no resolution, there's no closure, and people have just gotten kind of desensitized and immune to the whole financial crisis because it doesn't seem real right now. It seems abstract, right?
Right. And also, if you think about it, the dollar should have really rallied with all that terrible news over such a long period of time, and it hasn't. And when something doesn't do something one way when it should have, it almost inevitably turns around and goes the other way hard. And that's what I think we're on the verge of seeing in terms of the dollar. So all in all, I think gold's worst days are behind it. The juniors might take a little bit longer. They'll need gold to lead them out of the wilderness, but I think their day is soon to come.
Yeah, inclined to agree with you. And your 30 years of experience, you see these market patterns repeat. History doesn't repeat itself, it rhymes, as Mark Twain said, but we're seeing some big rhymes now with the dollar, and it's probably just a matter of time. Well, hey, Peter, thanks for being on the show yet again. And Grandich.com, people can subscribe to your newsletter, right?
Yes, right. Go to Grandich.com. You can either visit it or sign up for an email blast that will come to you once a day with the last 5 postings of mine,
which I read religiously. And if people want to go find other interviews that you and I have done, financialsurvivalnetwork.com. And thanks again, Peter. We'll talk to you again soon.
Thank you.